Welcome to another episode of BlockreVision. Today we'll discuss over just the economic calendar as we have some issues with the microphone. Normal episodes will get back tomorrow. So thank you for your patience and let's begin. So let's move to market mover section and look through the economic calendar. I have switched from investing.com to tradingeconomics.com website because of fewer ads, so hopefully you enjoy. So on Friday we have had a very important gauge that was retail sales month over month, and it turned out to be higher than a forecasted gauge, and as we can find in here, the chart of previous months looks like this, and we can find that we have beaten market expectations, and the demand for goods remained strong despite recent shift towards spending to services. So, for instance, sales rose in those branches as gasoline, restaurants, bars, clothing, general merchandise stores. We can find that we are in this unlocking economy period. However, how long that will stay, we will see. So right now this gauge turned out to be positive, but the next month will be obviously very important as well. And on Monday we had inflation rate year over year. So inflation rate in Japan has turned positive after when the consumption recovered following an acceleration in COVID-19 vaccinations. So as the Ministry of Internal Affairs and Communications says, main upward pressures came from housing, fuel, light and water charges. So on a monthly basis, consumer prices went up 0.3%, the same as in May. So Japan is getting back after this pandemic breakdown and finally getting the economy to the normal environment. Right now, as you can find, as the inflation rate is not as high as in the US, this exactly is a positive phenomenon for the Japan economy, and it may bring us positive forecasts. Let's look on Tuesday. We had for the US building permits month over month. It's also very important indicator that shows the possible inflationary pressures. Right now, building permits in the US dropped 5% from a month earlier to a seasonally adjusted annual rate, and we can find it was the third straight period of decline in building permits. So we can see that that's the lowest level since November of previous year, and we can also find that it may slow down inflationary aspects a little. On Wednesday we had EIA Crude Oil Stocks change, and we can find that this indicator turned finally positive. That means that we are ending an 8th consecutive period of declines, and compared with market consensus of a 4.46 million fall. So we can find that it has also coincided with a drop on WTI on US markets, and also it may bring some negative pressure on the price in the future as well. The the positive indicator of but the negative for the oil prices was recently in the middle of May, when we had a drop as well. As of Thursday, we had initial jobless claims, and it turned out to be higher than forecasted. This is the final chart of this initial jobless claims metrics, and we can find that despite the employers are struggling to fill open positions and citing ongoing labor shortages due to enhanced benefits, there are serious concerns in the economy right now about contracting COVID-19, and finally the spread of Delta variant of COVID-19 is also waiting on the job market during recent and also the coming months. So it's another indicator that shows us we are still far from hiking interest rates. And whereas building permits month over month in US has decreased, existing home sales has increased, as we can find by analyzing the indicator presented here. Existing home sales by June has increased, and is visible right now that we have gained for the first time since January. So as some specialists say, supply has modestly improved in recent months due to more housing starts and existing home owners listing their homes, all of which has resulted in an uptick in sales. And that's it for today. And for the full episode with market outlook section, with trade idea, with indexes outlook, I see you tomorrow.